All right, good morning. It is Monday, March the 25th, 2024. We hope everyone had a nice weekend. The season opener, what was to be the season opener for the 7 and 8-year-old girls soccer team here. Our team name's the Blue Tigers, by the way. We were rained out. So the season opener was supposed to be this Saturday. And Saturday actually ended up being a nice day in the afternoon, but the morning, I don't know, apparently the fields were too wet from all the rain Friday, and they don't want to ruin the fields. I thought we could have played, but so the debut will have to wait until next Saturday. But we hope you had a nice weekend. Also, it was really fun. Yesterday, Sunday, took my family to the hockey game. So it was, like the alumni weekend. And then they inducted Andrew Chernichin, a very old teammate of mine when I was finishing playing, and he played another 11 or 12 years. So he was inducted to the Hall of Fame, that was a really nice ceremony. They did a really, really nice job on that. So really fun. All right, markets last week. Everything surrounded the Federal Reserve meeting. Okay, on Wednesday, widely expected. So no change in interest rates, and like we mentioned in last week's video, like it was all going to come down to this silly dot plot. Right, it's a dot plot where the different members of the Federal Reserve they project where they think interest rates are going to be in the future. Okay. And this dot plot came out quite dovish. Okay, so even though the economy seems to be still moving okay, the dot plots are trending lower, right? Meaning the consensus of the Federal Reserve is that they see interest rates going lower. In fact, 3 rate cuts is the consensus still between now and the end of the year. Okay. So when I'm looking at this, like what doesn't really make sense for me is at the same time the committee boosted their GDP forecast and they kept their expected unemployment rate around 4%. Okay, because those two forecasts do not warrant rate cuts. Okay, so it just doesn't make much sense to me when you're boosting the GDP forecast. You think unemployment's going to stay right around this 4% level, and yet you want 3 rate cuts, which I don't know. That's very dovish, right? So on that, you see rates come lower. Stocks had a really nice week to the upside, right? Going over 2%, most benchmarks here in the U.S. Like my concern when I see that is like inflation, okay? That opens the door to more potential inflation, which I feel like I've been pretty clear on my perspective. I would much rather see short-term pain, whether that's a couple quarters, a bad year in the market. Like I would much rather endure that and ensure inflation is gone than to, I don't know, in my eyes, I think they're opening the door to potentially more inflation, which I don't love, but just one person's opinion here. But market loved it, right? Which isn't surprising. Lots of economic data this week that is in store. Really excited for another week of reviews. This has just been wonderful seeing many of you, and we hope everyone has a nice week. Questions, comments, concerns, please let us know, and we'll talk to you soon. Thanks.